The latest inflation report out this morning is giving a snapshot of the state of the economy, in addition to a surprising piece of jobs data. According to the Consumer Price Index for August, the price of goods went up 0.4% month over month, 2.9% year over year. Also, the weekly jobless claims jumped to their highest level in 4 years. Here to break it all down, NBC News senior business correspondent Christine Romans. She joins us again. We also have Investopedia editor-in-chief Caleb Silver. Good morning to you both. Thank you, as always, for being here, walking us through this. Christine, let's start with you. What does this say about our economy? That's a big number of layoffs there.
Yeah, I'm looking at the jobless claims number first before we back into the inflation data, because that really got a lot of people's attention. 263,000 first-time filings for unemployment. What does that big number mean? Well, it's the highest since October of 2021, and that's when the job market was not in a really great place. You were still in the throes of COVID, frankly, and shutdowns and reopenings and all this stuff that was happening in a really kind of tumultuous time in the American economy. So it tells us that the labor market might be weakening here, and what has been a no fire, no hire kind of job market might have some layoffs in there. So it's something to watch for sure.
Caleb, what are you looking out for?
Yeah, you add that on top of those massive revisions for the 12 months, March to March, plus the recurring revisions we have to the June numbers. Right. We just know the labor market is just not that strong now. Now you have consumer prices rising at a 2.9% annual rate. Again, not crazy, but if you look in aisles 2 and 3 at the supermarket, in the grocery store, you're going to see high prices for food, and that is driving inflation higher.
Yeah, can I tell you some of those?
Yeah,
Meat,
please.
poultry, fish, and egg index up 5% over the past year. So think you're paying 5% more than you were last year for those things. 5% is a big part of your family budget. And then you look at some of the other alcoholic and non-alcoholic beverages, both higher. There could be definitely some tariffs at play because some of that stuff is all imported. Bakery goods up 3%. So you're seeing hamburger, even month over month, hamburger prices are up, egg prices are up. Energy prices are down, though.
Energy prices are down, and gas prices being kind of low has been sort of a saving grace for consumers, because that gives us a little bit more breathing room in our wallet. But every time we go to the grocery store, we're paying more. You like apples? Apples up 2.7%. Tomatoes up 4.5%. Wow. That's after that price fix. So a lot of those, apples were at the end of the season, the beginning of the season, but still, these are the things we pay for on a daily, weekly basis as families, and those food prices driving inflation higher right now. Plus, a little bit of apparel jump there, and airfare prices also driving inflation higher.
So we get this data point, and in just a minute, we're going to have you do your magic trick for us when the Fed's meeting, what it's going to be for them. But what does this mean as like a piece of the mosaic, right, for Americans, what they're going to feel with their wallets? I mean, just a little bit ago, earlier this morning, we're talking about, is this great news that mortgage rates are heading down? And then we get something like this.
I think cost of living is still issue number one for American families. And this just shows why people don't feel great about their own personal economy, because these prices have been rising and they're so sticky. That's like a weird economics term, but it means that they're just hard to improve. And shelter is in here too. Shelter, that's another one of those statistician words for where you live.
Yeah, rent
or mortgage. Those are still real high. And so some of these prices that people are paying are non-negotiable. Car insurance, home insurance, rent, mortgage, food. These are things you can't kind of trade down. They're the unavoidables, and those have all been rising.
Caleb, quickly, it's meeting.
Yeah, 6 days, 5 hours, and 8 minutes, and the Fed is likely to cut rates, probably a quarter point. But if we had a hotter number here, you might have seen maybe a potentially bigger cut. But they're trying to balance the fact that the labor market is really weak right now, and inflation is rising. They cut too much, and we're going to get another spike in inflation.
I would not want that job.
No,
that's a hard line to walk.
Hard place to work right now.
Right, exactly.
Yeah, all around. Christina and Caleb, thank you both so much.
We thank you for watching, and remember, stay updated on breaking news and top stories on the NBC News app, or watch live on our YouTube channel.